Hi everybody, it's Thursday, October 30th, 2025. Our headline today is blow-off phase still evident. I talked about there being a blow-off phase evident on Tuesday, and while some of it is because of some of these really big companies having earnings this week, the amount that these companies are moving in reaction to their earnings is just absolutely incredible, with Meta going down 11.3% today off of their earnings from after the close yesterday. Amazon went down by 3% today in anticipation of their earnings report, which actually came out good. It's actually up right now about, 14% right now. But, you have Oracle going down by 7%, Tesla dropping 5%, Nvidia dropping 2%. None of these are part of this earnings craziness. Well, at least not directly, but the bigger point is that you have these ginormous companies moving around, going up and down as if they are meme stocks, as if they are penny stocks. This is what blow-off phase behavior looks like. So while it looks like we're closing out October without a major correction or crash, as many people, including myself, were expecting for this month, this type of blow-off behavior, for me, along with a whole lot of other data, tells me that there's a lot of wealth tied up in extremely risky assets. I'm not suggesting that Nvidia, Meta, and Microsoft are going to go bankrupt, but, when prices get too overly extended, the moves can be very wild, very surprising. And in my opinion, if we were in a healthy bull market, we wouldn't see these kinds of wild swings that we are seeing right now. So I don't believe that the stock market's going to keep going up, which leads us directly into our community topics end of year prediction for the SPX. The Robschild crystal ball prediction, let's take a look. 6,200 is my number. And it's sort of a random guess just based on where we are, based on what this chart looks like. But I see some support in this area. I could see us easily getting down to that level by the time we get to the end of the year. If you were to tell me, Robschild, you'll win $1 million if you nail it right on the head. And the further away your guess is, then the less money you get. I would say I would put my money on the table, or my chances on the table, at 6,200 is my number. What about you? Comment below. Where do you think SPX will close on December 31st? Make sure to comment below. Coming up, have a little bit more earnings left this week. Mostly oil companies, and then taking a look at next week. Notably, we have AMD, SMCI, Palantir, Uber, McDonald's, Trade Desk, and we're still waiting for the federal government even to give us a hint at, maybe even coming close to reopening. Powell's push to try to make this happen doesn't seem to be having any effect so far. I mean, the stock market went down today. Maybe if the stock market starts going down at a faster pace, that'll be the grease that the machine needs, so that we can finally get our initial continued jobless claims, employment reports, inflation data. All sorts of data that we rely on from the government is just in limbo right now. We don't know so much that would help us understand what the heck is going on out there. And don't worry, I'm sure we still will continue to have more tariff updates. The latest between Trump and Xi sounds like didn't go as well as people had hoped. But the one thing I found very interesting coming out of this was the fact that there was an agreement to reduce tariffs. And remember, every time that we've reduced tariffs in the past, the stock market went to the moon, and it's not happening. This overall stock market fell today, which makes me start to wonder, are we entering a phase now where we get good news and the good news isn't good enough? Is the euphoria ending? Is the paranoia, or rather fear phase beginning. It's very easy to forget how fearful people get and how fearful markets act when stocks aren't just going straight up. Before we get to our charts, thank you all for watching, liking, subscribing, commenting, and supporting. I very much appreciate the support. Many of you have donated to the channel, and it helps me greatly do what I do. And no changes to the crystal ball ratings. And see my website, link in the description to read through my daily reminders, current macro views, portfolio explained, and stock research center. On to the charts. The S&P 500 dropped by 1% today. And we've been talking on the show, some of these major updates have been on the back of only a few ginormous stocks, and now the same thing is happening going the other way. The S&P 500 as a total is falling mostly because of these big stocks, and funny enough, the rest of the map is sort of mixed, half red, half green for the day. However, the equal weight index also fell, but less than the market cap weight. RSP dropped by 0.43% today. I'm still surprised to see the VIX not even, getting close to 20. Remember, 20 oftentimes acts as like, okay, there's some fear here. There's no fear in the implied volatility of the S&P 500 right now. And even the volatility of volatility, still in a normal place. So does the options market expect people to come in and buy the dip? I guess that's what's going on. And maybe that'll be what happens. Another thing about today that's sort of important is that, this is the day after Powell spoke. And so now we are seeing how the whole world is reacting to this in the markets, because now we went through a cycle of the Asian and the European markets after his speech. And sometimes that can reverse the initial reaction. But no, we're not getting that. We're getting follow through, right? So the S&P 500, it was flat on Wednesday, but with a red candle, so on its way down. So you could maybe call that a continuation. The RSP certainly, just continued to the downside. And this does have to do with earnings and stuff. So the more important thing is the 2-year Treasury note yield. Where is the market expecting the Fed to be for their target rate? And we did rise in the 2-year Treasury note yield today by 1 basis point. So a bit of continuation, not a reversal. Similar thing happening in the 10-year Treasury note yield, rising 2 basis points today. My best guess in the near term for the 10-year Treasury note yield is from this trend line, this red one. I fixed it up a little, dating back to July 27th, looks like, to this bottom here in September, major pivot low. If we were to reach up to that line, that target is 4.15. It appears we're headed there at this point, but your guess might be as good as mine. HYG, junk bond divided by SHI, went down a bit today, showing credit spreads spreading, just not a lot, just a little bit. Bitcoin fell today intraday, reaching around 106,390. I think there's more downside left in this. Well, one thing that supports that is, I believe we have 3 black crows here, with a red candle, larger red candle, and even larger red candle is typically pretty bearish. Again, if Bitcoin leads stocks and Bitcoin continues down, I think it's likely the S&P 500 will follow it lower still. And I've been saying this every show, but yeah, we're a lot further away from our all-time highs in Bitcoin than we are in the S&P 500. If we're going back into risk-on mode, Bitcoin should be climbing higher. What is climbing higher is DXY, the dollar index. The dollar is dead. Nobody wants dollars. Well, they did today. If the dollar continues higher, that often puts a pressure on stocks to actually go lower. Next up, crude oil has been going. We've been going flat. I thought we were going to be going more straight back down to where we were before the Russian spike. So oil's taken a pause here. Next, we have gold rising 2.4% today. The damage done on October 21st, dropping 5%, is pretty heavy. Traders better than myself are looking for the $3,500 level to be the place that we are headed. And last chart today, the 10-year break-even inflation rate. I just want to bring it up. I don't know if we can count this as a meaningful chart pattern or not, but it looks to me like let's put this on the ear. At the tail end here, can I zoom in a little bit? Here we go. What does this look like here? It's a consolidating bear flag, right? We have higher lows, lower highs. So it's coiling up tighter and tighter after a move down. If it plays out like any other normal financial chart, that's a pretty bearish setup for the expectation of inflation. The thing that's really top of mind for me is still the federal government being shut down. And when it reopens and we get that wave of data, what is it going to look like? Are we going to find out that, we're in deflation? Are we going to find out we're in disinflation? Are we going to find out inflation is taking off to the upside? Is the jobs market fine? Have we clearly bottomed and we're recovering, or is it still collapsing, or has it done nothing? Is this going to be a non-event of the floodgates opening and no water coming out at all? I don't know. I'm just a guy with a crystal ball, and that's all from me and my crystal ball. Hope you enjoy. Thank you for watching, and see you next time. Robschild.